What's going on, Hustle Nation? Today we're going to be talking about what seems to me a very good growth as well as dividend stock. Now you hear a lot of people say, hey, this stock's a good growth stock over here, but it doesn't pay a dividend. This stock over here is a great dividend, but it just sits there and doesn't do anything as far as stock price, or it goes down. So in this video, I hope to share with you what I have personally bought myself. So I do have conviction in what I'm telling you, and I do own this particular stock. Let's go ahead and dive into it, and I'll show you what I'm talking about. And definitely leave me a comment below if you agree, disagree, but more importantly, why. Okay, I'll give you my reasoning for me buying this stock as well as for recommending it. Okay, but you just let me know what you guys think. All right. So let's get into it. So the stock that I'm talking about right now is Iron Mountain. Okay, Iron Mountain. You're saying Iron Mountain? That's a dividend stock, and it might be, but their focus, after reading their quarterly report, is to be on growth, and we'll go over that here as well. So imagine a growth and a highly paying dividend stock, and they say that their goal is to keep the dividend sustained. So you're still getting the dividend as well as the growth. Imagine that. So let's look at the numbers here. Let's look at the data. Okay. All right, so what is Iron Mountain? Iron Mountain, IRM, on the New York Stock Exchange, founded in 1951, the global leader for storage and information management services. Trusted by more than 225,000 organizations around the world, and the real estate network of over 90 million square feet across about 1,400 facilities in about 50 countries. Iron Mountain stores, protects billions of valued assets, including critical business information, highly sensitive data, and cultural and historical artifacts. Providing solutions that include secure storage, secure record storage, information management, digital transformation, all that. Okay, so basically what it does is it stores information. Imagine you've got a big company that needs to store boxes full of files, right? So you call Iron Mountain and say, yeah, we'll keep your files, don't worry. They come to your office, they pick it up, and then they take it over to a secured facility. I mean, and they keep the average, you'll see here, I just get into the average retention is like 15 years or something for a box or something, but we'll take a look here. I just thought that was incredible. So let's have a look, see real quick. Iron Mountain. Iron Mountain. Iron Mountain. Iron Mountain. They have a diversified business model, which means that they got a storage business mix and a service business mix. Their total revenue, $4.2 billion in this quarter, in quarter 2 of 2021. Okay, this is their presentation. I'll put a link in there in the description below. It's just straight off their website, but I'll leave a link in the description below to it. 4.2 billion. Most of their money comes from storage revenue, records management, service revenue. So they store a lot of stuff. Okay, but let me go up here. So what exactly, at a glance, what is Iron Mountain? So I alluded to it previously, but their global presence is about 730 million cubic global physical volume. They've got about 1,430 facilities in 56 countries and 6 continents, around 93 million square feet. So that's pretty dang big. Their significant size, about 12 billion equity market cap, 21 billion total enterprise value, 4.2 billion in revenue. That's really good. When's the last time you had 4.2 billion revenue? I don't know. About 280 owned facilities, 15 operational data centers, which is going to be the future, you know. S&P 500 member. I don't know what any of this stuff is, foreign stuff, but this is the one important one for me, S&P 500. About 225,000 customers. They got a lot of customers. They're serving about 95% of the Fortune 1000 companies. Awesome. Customers from over 50 different industries, all right? Good at a glance right there. We talked about the business model. So like I said earlier, records management, right? The lady here, she's storing some stuff. They got about 710 million cubic feet of hard copy records archived. 98% customer retention rate. Boxes remain in facilities for 15 years on average. Wow. So global physical storage portfolio, consumer and other records and information management. That's their big deal right there. That's their big deal. But they're growing in other things, it looks like. All right, data centers at a glance. 3 countries, 3 continents, 5 countries, 13 markets. They got 15 of them, 3.5 million gross square feet, 100% uptime SLA, 10 internet exchanges, 1,300 customers. Okay, wow. Data center differentiators, where they're at: Chicago, Denver, Frankfurt, London, New Jersey, Amsterdam, Boise, and others, Singapore, and Phoenix. They plan on expanding to India through JV partner, WebWorks, maybe? Yeah. A project summit overview. Looks like a bunch of financials there. About 375 million. Expected annual run rate benefits. Okay, that's strong sustainability focus. Great. Okay, strategic shift, accelerating revenue and EBITDA growth. Okay, so they want to grow earnings before interest, taxes, depreciation, and amortization. So they want to make more revenue growth, basically. So 2020 is a year of resilience, momentum. 2021 is a year of growth. So they're saying 2021 is a year of growth. Investments in innovation, culture, powered by Project Summit, fine arts, all that good stuff. There are exciting growth opportunities. Data centers, yep, that's a huge thing. It's going to be for a long time. So that's, to me, the data centers, right, is the big thing, right, for the opportunity to grow. Because there's other, I mean, like Amazon Cloud and, you know, Microsoft, they don't have all of their own data centers. They outsource to these other data centers. You might not have known that. So, you know, Microsoft or Amazon or Google can be customers of Iron Mountain, theoretically, right? I mean, I'm not saying they are, but it's a hypothetical situation. So what I'm saying is data centers are a big thing for the future. Consumer storage, their big thing, or not their big thing, but they're working on that. IT, asset disposition, fine arts, entertainment services, digital solutions. 5-year growth momentum. Expansion to 15 facilities in 3 continents since 2017. 20 billion total market on the data centers. It's really good. Okay. Our total addressable market, TAM. 2015 is 10 bill. 2020 is 80 bill. So it's about 13% increase year over year. That's pretty dang good. Prudent capital allocation. All right, yeah. Sustain the dividend level at current level. Just sustain the dividend at current level. Awesome. I'll take it. Because I'll show you here in a second, it's pretty high dividend. Long-term target leverage ratio. Okay, reinvest in the business through growth capital expenditures. So they're going to reinvest in the business to grow. Right? Great. Balance sheet remains well positioned. Good. 1.8 billion of liquidity, 85% fixed debt. Fixed rate debt, that's a little high, but whatever. Q1 performance. All right. Their total revenue from 2020 compared to 2020, it was 1.069 billion, and 2021 is 1.082 billion. These are millions. Okay. So it's 1%, which isn't great, but still, I'll take it. Adjusted EBITDA up 4%. The guidance, all right, that's just forecast, so you know that's whatever. But the key takeaways is proud of the continued performance of core business in spite of COVID. Project Summit progression well. On track to realize structural cost savings, 375 million. Strong start to the year with 9 megawatts leased. All right, let's just get into it here. I think that's it. And that was Iron Man. All right, so that's the presentation. Let's look at the real stuff here, okay? Talked about the company profile. All right, so the PE is 38.42, a little bit high, but not too high compared to the industry. We'll take a look at that here in a second. We'll come back to that. The annual dividend yield, 2.4740, which is 5.7% dividend. Now imagine, as I told you earlier, it's a 5.7% dividend, which ain't too bad right now. You know, as interest rates go higher, maybe it might not be as good, but right now, 5.7 as of July 25th is pretty dang good. As well as what they're focusing on is growth. Okay, so I bought some. I'm not saying, hey, look, I'm not a financial advisor or anything like that. I don't know what I'm talking about, blah, 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 blah. Okay, but, you know, you might want to take a look at Iron Mountain. That's all I'm saying. Leave a comment below. You like it or not. Tell me. And tell me why. Let's see here. All right, so good dividend there. Let's look down. For the past, since 1998, it's been up and down, but for the past year or so, let's just do a 1 year, 1 year daily. Okay, so for the past year, I mean, if you bought it last year, of course, you know, you'd be making a lot of money. And for the past 2 years, same thing. For the past 5 years, you know, you'd be making a little bit of money. For the past 10 years, okay, whatever. That's good. So it's on the rise right now, obviously. The earnings, the important stuff, right? The important stuff. Okay, so let's look at the dividends. 5.7% like we said. The market median is 2.39, so it's beating the market median. Earnings per share, look at that. 31 cents, 29 cents, 32 cents. They are earning money. Earnings per share, Iron Mountain, $1.13 per share. Industry average, 2.13, so running a little behind. But, of course, the PE is going to be a lot lower. This is what I was talking about earlier, 38.42 versus the industry average of 87.42. Same thing with the 5-year average. So, earnings per share trailing 12 months versus prior trailing 12 months, up 8.65%. Not too bad. Let's see here. You can get this in, if you don't want to buy the Iron Mountain itself, you can get these in some ETFs, such as these here. I own this one here, the SPHD High Dividend, Low Volatility, which is good. The REIT one, which is good. The Super Dividend. I own those 3 as well. So there's a couple of ETFs for you, ETF picks for you. And that's all I think, and that's what I got for you guys. So let me know what you guys think. Leave me a comment below. Give me a like. You got to hit that like and definitely subscribe. Okay, right now I'm a 0 channel. I'm a super small channel, but if you subscribe, let people know that what I'm telling you guys is not just for show, right? I mean, this is real deal here. So, anyways, keep hustling, guys. Like, comment, subscribe, do all those things, and thanks a lot for watching. And I wish you much success in your business and in life. Peace out.